Welcome, everyone. My guest today is Jon Schneyer, Director of Catastrophe Response at CoreLogic, to talk about the LA fires and the potential impact on that region's housing market. Jon, welcome to the podcast.
Hi, Sarah. Thank you so much for having me.
I'm very thankful. I know that you are so busy right now with everything that's going on. So, I wanted to have you on to kind of give us a recap from a CoreLogic perspective. You guys are the experts here on, you model out climate events, what might be happening, and we are having this, incredibly, terrible fires in situation in California. So I wanted to kind of talk to you about what does that look like? What are the impacts might be? And just kind of get your perspective on, people trying to run a business in that area, how that might be affected mortgage and real estate.
Yeah, absolutely. It's a great question. Yeah, what's going on in California, in Los Angeles area right now, I mean, it's heartbreaking. I'm on the other side of the country, but I've seen the images from Pacific Palisades and Altadena, and it's incredible. It reminds me of when just after Hurricane Helene, I got to go down to North Carolina to see some of the damage, and just to see that level of destruction, complete destruction, it's powerful. When these big events are ongoing, you're right. It is our job as a risk expert, model provider, data provider to get a handle on what the economic, not really economic impact, sort of the insured loss impact or the impact of property, whether that be real estate markets, mortgage and lending, or like I said, tax bases as well, to get a handle on what the potential impact could be, keeping in mind two things. We want to do it quickly, but we also want to do it accurately and precisely. So I guess three things actually, precisely as well. A range of losses, saying $5 to $25 billion, is not very helpful. Those are very different events. The point is to come out with a number that is accurate and precise. And to do so, we need to be monitoring the situation to make sure it is in a place where we can confidently say, not much is going to change in the future. Let's start calculating what we think the loss will be.
That's really interesting. So, I mean, these particular parts of California maybe weren't affected by earlier fires, but you guys are very familiar with these kinds of fires and what normally happens, and then what the rebuilding looks like. So, in this early days, what are you looking at? Like, how do they compare to the other things that you guys have seen in the area?
It's a really good point. And what's important to think about with wildfires, right? If you look at the number of wildfires or the acres burned every year, the last couple of years in California, right? It has not been 2024 and 2023, 22. We're not so astronomically different. It just so happens now that we have a wildfire that is in an area where there's built environment, where there are homes and there are buildings. And it really only does take one event, just like hurricanes. A hurricane can make landfall in the middle of nowhere and losses are minimal, but it makes landfall in Tampa Bay, St. Pete, losses are astronomical. Same with a wildfire. Fires can burn in Northern in Northern California, in the woods, and it's not a big deal. But as soon as one enters the wild urban interface, or this area where there's development, where there's property and there's risk, well, then we start seeing, insured loss estimates in double-digit billion dollars. One of the things we've noted so far, especially what's been happening in the Palisades fire, is similar to what we saw in Lahaina about a year and a half ago. This concept of urban conflagration, where once the fire spreads from the wildland to the urban of the wildland-urban interface, the buildings become the source of fuel to continue the fire, and then it can spread incredibly rapidly. Combine that with hurricane force wind gusts coming out of the mountains that can shoot embers a mile, 2 miles away from the source. It means that these fires can spread incredibly rapidly in God knows what direction. And it's not too surprising that the fires, especially the Palisades and the Eaton fire, if I'm looking at Cal Fire right now, they're both still at 0% containment as of right now. These are very fluid situations, they're very scary situations, because the fire is still very capable of spreading quite rapidly.
So, as someone who looks at this a lot, maybe you can help us understand, 0% containment means what does that mean? Does that mean it's just completely out of control? As a layperson, I don't know what that means, or if it's 10% contained, is it 10% less deadly? What does that mean?
Yeah, the containment, I believe it has to do with literally what percentage of the perimeter has been stopped. And they'll pick areas, right, parts of that perimeter that are encroaching upon the population or on property. And they'll do things, whether it's literally stopping putting out the fires. Um, they could be putting in fire breaks ahead of the fire so it physically cannot propagate any further. That could be a prescribed burn, literally removing vegetation out of the way. But that's what they're trying to do. And one of the other issues, right? I mentioned these hurricane force winds that we saw on Tuesday and Wednesday in Southern California. Is it actually prevented flights, aircraft from being able to go in and drop either flame retardant material or water over the fire? It was too windy. And these are really important tools in the wildfire fighting process. And if you can't fly, can't drop all this, you're stuck just with people on the ground having to fight the fire, and that's a uphill battle for sure. So still uncontained. I don't expect containment to, over the course of the weekend. I'm hoping we'll see 20, 30, 40% containment. Again, it really does depend on a number of things. If the wind patterns change, we get some humidity. It's not supposed to rain, unfortunately. We were hoping it might, but at least the winds are supposed to quiet down. Might even have some onshore wind, help increase humidity. Will make life easier for firefighters over the course of today, tomorrow, and the weekend.
The big question is, it feels like California and Florida, but California has been ground zero for insurance challenges, right? Because they do have so many events. And then, there's been some legislative fixes that people could say made it worse or better, capping, what insurance companies can charge made some people leave. There's all that going. What do you think this does? I mean, that's the big question, is like, what is this going to do to insurance in California?
It's a really good question. And fortunately, actually very recent changes in the California regulatory environment with regards to insurance are going to make the carrier's job essentially easier, so they can effectively model and price the risk. So prior to January 1st of this year, right, carriers were restricted, if they're going to write in California, to using historical loss experience as opposed to using the probabilistic, CAT models that a company like CoreLogic produces. It was a consumer protection or consumer advocacy policy. It's a model that we built, so we don't obviously make it totally open, but understanding that if you don't know 100% what's in, it is in the interest of the consumer to have all the information. But that policy has been changed very recently, and now the models are important because it allows carriers to identify, right, areas of concentration of risk. So, they might know where their policies are, but they can now use a stochastic model that simulates hundreds of thousands of wildfire events to get a sense of what their 100, 250, 500-year, 1,000-year wildfire loss would be, so they can make effective their own risk management decisions, whether that be reinsurance, traditional reinsurance, cat bonds, what have you. Should make insurance more available and hopefully more affordable in the state of California. Now, like you said, it is right. It is the center of wildfire activity in the United States. It's in California. Not only is there a lot of wildfires, there's a lot of homes built in these areas that are at risk of wildfire. So an event like this is one that a lot of people have been fearing, the big wildfire loss event, something, we haven't seen something of this magnitude probably since the Camp Fire in 2018. The insurance industry in 2018 managed to reconcile itself after that event, and I imagine they will be able to from this as well. But again, a very fluid situation with the fire still changing. Hopefully the losses don't become so high that this is an industry shifting event.
After the campfire, I believe we saw people come back into that area. Maybe I'm thinking of if that was the one in Paradise, right?
Yes.
Like it did not deter people from coming back into that area and rebuilding or building for the first time.
It's a good point. And it speaks to people's resilience. And it speaks to the fact that, you can rebuild your home. You can't rebuild a life lost to a fire. So it speaks to the importance of, if you're told to evacuate, you should evacuate, because you can always come back and rebuild. But yeah, the resilience of people who come back and rebuild with a plan. So one of the things that we looked at after the campfire in Paradise is modeling the efficacy of mitigation, either mitigation practices done to your home a Class A roof type, clearing the brush within the first 5 feet of your home, making sure there's no combustible materials like fences or secondary structures attached to your home. Um, and these are great ways to reduce the modeled wildfire losses. But when you combine them with community level mitigation practices and making sure that everyone in the community partakes in this, so like it's important that you do all these mitigation to your house. Also important that your neighbor and their neighbor and their neighbor also does it. And when you rebuild, thinking about rebuilding in a smart way that there's fire lines sort of built in to the community. When we looked at the reduction model losses, wildfire losses in a new paradise, essentially, after the campfire, individual community level mitigation, and when combined, reducing losses by up to 75%. But it actually has a pretty meaningful reduction on modeled insurance premium, up to 55% reduction in insurance premium. So if you do mitigation when you rebuild, and make sure all your neighbors are doing it as well, it could have pretty material impacts for the financial burden of having insurance after you rebuild.
This is really interesting to me because as a layperson, whatever, I don't know anything about that, but it's like you would think like, is it a good idea to rebuild in an area that has that? But what you're saying is like, if you rebuild and you do it in the right way, you could actually see, first of all, it could be more affordable if insurance companies are able to price the risk and you're taking some of that risk out, which is the opposite of what I would think, which is like insurance is going to go through the roof.
Well, unfortunately, in California, right, if you do something to your home to mitigate wildfire insurance, and if your community does as well, carriers are required to account for it and credit premium appropriately, how much it reduces risk. So the other thing it kind of speaks to is this concept. It's a phrase we like to use called know your risk, accelerate your recovery. It's risk education, and that is applicable to the carriers and individual homeowners as well. Carriers, if you have better sense of the property data of the homes you're underwriting, you can effectively account for mitigation and charge an actuarially sound rate where you can provide coverage in the case of a disaster. But for homeowners to know, right, there is a level of risk in this area. You want to build in a community that's in the mountains, in the woods in California. There's a level of risk associated with that, one that you have to be comfortable with. But there are things you can do to prevent future wildfire disasters. The other, I'm not going to say good thing, but the other thing is that, an area that burns from wildfire isn't likely to burn again for a number of years when all the vegetation is cleared after the fire. It actually does greatly reduce wildfire risk for a handful of years in that area. But remember, it will creep back as stuff starts to regrow. So you will never eliminate wildfire risk, but you can be aware of it and you can plan to mitigate it, physically mitigating fires from spraying to your home and mitigating the financial distress post-event.
When you guys look at, so I mean, we just had the floods on the other side of the country, right? When you look at, if you're comparing like fire damage to water damage or flood damage, is there a better one, or are they just both equally horrible?
It's a good question. I get asked that a lot about what's the worst disaster, which is worse than the other. I don't know. It's a hard thing to compare. The one thing I'll say, or what I will say to that is that flooding, for the most part, and it's not always the case, when you have really strong storm surge, it can knock over your house. But you get some water inside your home. Yes, the contents of your home probably need to be replaced, and there's probably some remediation, drying out, replacing materials that need to be done. But you don't necessarily have to rebuild the entire home. We're not talking about complete knockdowns for the most part. Now, if you have 8 feet of water in your home, yeah, it's pretty much knocked out at that point. As opposed to wildfires, with the exception of smoke damage, if there's fire damage at your home, pretty good chance that it's 100% destruction. There's obviously some uncertainty, and there's a range, right? You could have moderate damage from a wildfire at your home, but especially when you look at the images in LA right now, and you're seeing areas that were damaged, 100% damage. The fires are scary because, right, we're talking. It's hard to know where it's going to go. It's the same for flooding as well. Hard to know where these fires or floods are going to go, but at least with a flood, for the most part, you should be able to move back into your home. Maybe not the case so much with fires.
And I know, specifically in, some of the damage that we had from a hurricane, that in areas that don't normally have a hurricane, but at least with a storm, it's coming. Normally you can say, do some things ahead of time. It feels like fires are much less predictable.
Yeah, it's true. I mean, especially with things like, yeah, weather-related events, hurricanes, or even just severe weather that causes flooding. Yes, we have a much better sense of when they're coming and you can prepare, especially with hurricanes, right? We watch hurricanes for a week before it makes landfall in the United States. Um, Now there's some uncertainty on, the exact landfall location, how bad the flooding will be. But yeah, right, we have a much better sense. We can evacuate ahead of time. Not the case with fires, but these fires can start very quickly and they can spread really quickly, especially in these high wind situations. Again, what happened in California, similar to what happened in Lahaina a year and a half ago. Really fast winds means fires can spread incredibly quickly. If you're told to evacuate, you should evacuate immediately because that means the fire could very easily spread to your home. Um, yeah, and we don't have as much warning. These are events that can also be human caused. So, right, that's right. We're not modeling. It's like, you can model or you can keep track of where lightning is going to occur. You watch in the severe weather, there's a big lightning storm going to hit this area. It's an area that is susceptible to wildfire because a lot of vegetation is dried out. But if, someone throws a cigarette out their car window, you don't model that. Fire just pops up randomly, and can spread incredibly quickly. And it can be incredibly distressing, obviously, for the people who live there because it's 0 to 100 immediately.
And that's what we're seeing in these, especially like you said. I mean, when you're watching what's happening, it's like, people did not have time to do anything. Just grab their dog, grab their, animal, and a small person. They have to get out.
Mm-hmm.
So maybe walk us through, like, at the top of this podcast, I said you guys are the experts, and the reason I say is I know that FEMA. I mean, you guys work with FEMA. You are the
Mm-hmm.
ones who are giving them a lot of information. What does that look like in a fire situation?
Yeah, so usually what we'll do is we'll start with the perimeter. And usually those perimeters we can get from publicly available sources, National Fire Agency kind of group that makes a perimeter available. And once you have essentially a shapefile, what we have at CoreLogic and what kind of separate us is that we have this really detailed structure level database. We know where the structures are. We know who owns them. We know what their reconstruction cost value is. We know some of the tax or loan information on those homes. And it's essentially a spatial overlay. We can say, look, I can tell you where the buildings are that are at risk for fire damage. We can give you the specific addresses if they're ones you're interested in checking in on, or if we're trying to get a handle on, what percentage of the population is going to need to be evacuated and how many people are going to need emergency services, for example. So we start by looking at that. We use publicly available data on the actual fire, usually what is essentially what is out there and what we can get our hands on, observations, what have you. And then we leverage our property data or our models to start thinking about what the potential financial impacts can be. Now, one of the challenges, obviously, a fire that is still uncontained is that we can start working on a number right now, and in 12 hours, that number could just be completely out of date. Just yesterday, right, with the Palisades fire at 1 a.m, right, it was something like 2,900 acres were burnt, but by 2 p.m. that same day, that was a 15,000, 16,000 acre fire. So these, like I said, it's a very fluid situation. They're changing on a dime. So it's very difficult thing to come out with a monetary loss while the fires are still evolving. That being said, the other thing we'll do is we'll look at historical precedents and see if we can find something that which we can anchor our best guesses of insured loss. So we'll go back to Paradise, for example. It's probably in recent memory biggest impact insured loss event from a wildfire in California. Now we know that something like 19,000 structures were damaged or destroyed in the Camp Fire. The insured loss total at the time was $10 billion or so. Now the average home price in Paradise, 500,000, about $500,000. So we apply those data points to what we're seeing in Los Angeles now. We have a much smaller fire, right? Camp Fire with 150,000 acres. Palisades is 20,000. Let me pull up CAL FIRE now and get the actual number for you. 17,000 acres is the Palisades fire when we're recording this. So much smaller fire, fewer properties damaged or within the perimeter right now, but we're looking at a bunch of very high value homes. These are expensive homes. They're big homes. Reconstruction cost values are much higher. The assessed values are much higher. The tax implications are much higher. The loans, the banking associated with these homes are much higher. So, like I said, we try to use a historical precedent from which we can anchor our loss estimates before we actually have an actual model number. And a $10 billion of insured loss, based on what we're seeing right now, is not out of the question. Could that number change? Of course, fires could evolve beyond our comprehension right now while they're still uncontained. But I think that's a good number to start from.
No, that's really helpful to compare those. And that is one of the things that's distinctive about this is like, Pacific Palisades. Like some of the most expensive real estate in the country is along the California coast. So you can see how that could be really detrimental. At the same time, you hope that, some of those people have the money to, recover faster than maybe somebody who's more in the middle class or, just makes a normal salary. So, I mean, there is that you think, well, hopefully they have the means to come back quickly.
Yeah. And I would imagine that would probably be the case. These are probably people who can be able to afford insurance on their homes as well, or self-insure. And I imagine they will rebuild. And I hope when they do rebuild, they consider wildfire risk at their home in the future and what they could do to mitigate it. But it does speak to this sort of dipole disparity we have between those with and those without insurance affordability and availability. And we hoping that with the regulatory changes, carriers can use the tools needed to make insurance more affordable and available to everyone, so that when these events do happen again in the future, it's not just those in Pacific Palisades who can recover. It's people in Altadena or elsewhere in the Los Angeles area or in California or anywhere in the United States where insurance affordability and availability are hard to come by.
Our audience is mortgage people and real estate people. Is there something that maybe they would want to know that I haven't asked?
I'll say this again, to know your risk, accelerate your recovery. And I've noticed this a lot in real estate and mortgage and lending, more so than insurance, is really having a good understanding of what the risk is to the portfolio that you're managing, whether that be, especially the physical climate risk, which I think is something people are starting to consider a lot more in their decision-making process. They might have been thinking when they're doing their scenario analysis, again, this is more in the mortgage lending space, they're modeling economic scenarios, gray swan, black swan events, but it's important to think about the climate event because not only is it having an impact on the physical damage to the properties of which they have underwritten in the loan, but the home price, the equity tied up in those homes might be decreasing because of the risk of natural disasters. The frequency, these high frequency, becoming high severity perils like flooding and wildfire might have a pretty meaningful impact on the value of a home. It might be less than you might think. And when they try to resell, they might realize that maybe my $5 million home is only worth $3 million. It's not obvious, right? Just by looking at the home that might be there. It's kind of a long-term trend, but knowing the risk for any peril that is relevant to that area in California, right? It's wildfire. It's still flooding, even in Southern California. If you remember the atmospheric rivers, there's plenty of flood risk, earthquake risk. We saw last year when Hurricane Hillary or Tropical Storm Hillary made it all the way to LA. Maybe there's a tropical cyclone risk as well, though much lower. But said know your risk to your portfolio, physical and the sort of long-term economic impacts that might have on the value of those homes.
Jon, thank you so much for being on today. Appreciate it. I know you are extremely busy right now and being called on by a lot of people. We appreciate you sitting down and doing this with us.
Of course. Thank you so much for having me, Sarah.